What's up, everyone? It's Scotty with Money Investing. Welcome on board for another Market Open live stream. We do have inflation numbers coming out in less than 30 minutes now. So I'm just going to fix the camera here a little bit. There we go. We should be all set. If you guys can see me, hear me, just give me a thumbs up and we're all ready and all set to go. Warren Buffett is actually live on CNBC, or at least he was for the last hour. So I'm going to play what he has to say. I'm going to play that clip. We're going to listen in on what he has to say, and then of course jump into some of the inflation numbers, which are now coming out in under 30 minutes. So again, if you guys can see me, hear me, just give me a thumbs up, and I'm going to do a very quick audio check in our chat as well. So if you guys can hear everything here, let me know in the live chat. I'm going to play it and we should be all set.
So let's talk about the assets that are out there, though. You've got assets now from Silicon Valley Bank, from Signature Bank, that are now the responsibility of the government, who's trying to auction off some of these things. You've got people asking questions about what comes next if this sort of pig in the python continues to work its way down. If that's the case, commercial real estate has been brought up as an issue of a looming problem, particularly since 80% of commercial real estate loans are made from these regional banks where most of the problems have been.
Yeah.
What do you think about that?
I think that there will be problems and people had anybody that's got a fixed rate locked in for a while, when the fixed rate goes away and they got to reprice it now, has got a problem. And the holder of a 30-year Freddie Mac or Freddie, they've got the best deal in the world, and they should. I love the program, but
you mean somebody who has their 30-year mortgage?
Yeah, it has the mortgage.
Yeah.
But the reason for the very fact that it's very advantageous to the person who has the mortgage means it's a very dumb holding for banks. But I also believe in the system that produces, I think, net the country is better off because but I don't want to own any 30-year mortgages myself. And the idea that if you've got a 30-year mortgage, you personally, you can call off the deal 10 minutes later, and if the bank's got a bad deal, they're stuck with it for 30 years. Berkshire cannot make the deal with our credit that you can make if you qualify for making a Freddie or Fannie Mae. I think that's a good thing for society. I don't think it's a very good investment for banks, but banks have a good enough business if run right that they can do some things like that, and they but I still wouldn't do it myself. And we will see people, well, it gets back to that old story, when the tide goes out, you learn who's been swimming naked, and we actually ran into a nudist colony here. I mean, in terms of the banks all over do that sort of thing, and they can handle losses. But to say that because you can hold at maturity, that therefore it's safe. Well, what if the prime rate went to 21.5%? In the 1980s. Who knows what can happen to what you're paying on your deposits? And people really know now what they can get. The idea that you've got this kind of lazy money and people are sitting around with money and zero. You're telling them every day on CNBC, go shop around and get the best rates you can for your money. And so, unlike the physical world, I mean, in the physical world, you know how fast sound will travel. Will travel at the same speed as 20 years ago or 50 years ago, and you know if an apple falls from the tree, how long it will take. Basically. But in economics, the equation changes every time because of the experience of the previous time. So things that seemed to make the mistakes of 2008 and 9, they affect how people behave subsequently, and 2023 is a different world. The speed, it isn't like light travels at the same speed or anything like that, and people have adjusted so that lazy money in 2008 doesn't exist in the same way at all, and we'll see how it plays out. But it's our job at Berkshire, for example, and in all our businesses to not think about, well, you take cognizance of what's happened in the past, but you have to worry about things that people haven't seen yet. And the people that have run banks the wrong way, their shareholders are going to lose money, but the depositors aren't going to lose money. And I made that offer, in the previous segment, and if anybody's called in with $1 million, I'm still good for it.
Okay, let's go back to that for anybody who's just tuning in. You're saying that you will put up $1 million against anybody who wants to take the other side of the bet that no depositor in a U.S. bank will lose money
in the next year. In a year from now, whichever one of us has won gets to decide what charity the $2 million goes to. So charity's going to win, just like on that hedge fund bet I made a few years back. But I'm betting on what's is certain to happen politically. It isn't the law now, but it'll get changed. I will bet on the fact that the United States will not suffer ruin the world by messing around and not finally changing the debt ceiling. And why the Congress we elect to do all kinds of things, and they're overworked in all kinds of ways. Why they spend a lot of time fiddling around on that and make hay out of it on one side or the other, depends who's in charge. I mean, it's just silly. And I'd rather have the government, actually focus on things like they did back in the New Deal, which my dad hated, but which Social Security came out of, and the FDIC came out of. These things really improved the situation of the world, and they improved America. And I've got the advantage of hindsight, and I've believed in it, and really, since I was 11 years old, I just said bet on America and figure out a way to be in the better businesses. But even if you're in the average business, it's just the way we still work despite all our shortcomings. But we can work better.
All right, back to commercial real estate. We have had lots of investors in commercial real estate who have come in and said that this is going to be a crisis point, that the government is going to have to step in, that something should be done because there are so many commercial real estate loans that are coming due between now and 2025, and that they won't be able to get credit from the banks in the same way to renew or to, once those maturities come due, to refinance.
Well, let's say they lose $100 billion in the banking system. Most of the banks can take that loss, their share of that loss, and a few of them, because they did other things, their shareholders will end up losing the money, but the depositors won't lose money. But if you lend money to somebody and it comes due and they can't pay, the old story about the banker, I never made a bad loan. Of course, some of them turned bad after I made them. I mean, and that's exactly what happens in, whether it's in commercial real estate. And if money rates are 2%, or we were lending money out of 4 basis points at Berkshire to the federal government, not much more than a year and a half ago, or something like that. And if those rates change, let the person who bet that they wouldn't change lose money. I mean, that's if you make mistakes in business, plenty of people make mistakes. You pay for them. If you've got a big profitable business on top of it, which a good many banks do, you take your losses and you keep going on. I mean, banks can take a lot of loan losses, but they can't take something that wipes out their capital and expect the world to ignore that fact.
Meaning that you don't think anything needs to be done on the commercial real estate front?
Well, I think that the people who lend too much money should take losses, and they're getting properties handed back to them now. I mean, within the last month or 6 weeks.
The banks are.
Yeah, I mean, they got some office buildings in Los Angeles, and Blackstone walked away from something. I mean, and if you get a non-recourse, everybody goes in the real estate business is told the first rule, the second rule, the third rule is never sign your name to anything. And so you have non-recourse mortgages, and they're going to walk away, and the bank's going to get stuck with losses, and maybe they'll hold the property a long time, and it'll come back. And there's all kinds of ways that if you got capital strength, you may decide, well, I'll just hold it, but that money is sterile for for quite a while, and that's part of banking. I mean, you expect to lose some money in banking. It's not a sure thing on every loan, and you build that into your calculations, and then you have capital that protects your depositors from it eating into their money. And if it does eat into their money, then the FDIC, which is in effect really a mutual insurance company of a very peculiar sort, essentially spreads the losses among the continuing banks by higher FDIC assessments in the future.
We've had some people in commercial real estate who make the point that it's not just commercial real estate, but other places where the economy is turning over, where inflation is coming down, that the Fed is doing too much. What do you think of the job the Fed is doing right now?
No, I do not think I could run the Fed as well as Jay Powell's run. I think Jay Powell has been a terrific, and part of the job, well, look at Paul Volcker back in the 1980s. I mean, people were sending him, I mean, he needed Secret Service protection and everything else. But in the end, he felt his responsibility was to do the right thing at the Fed, and he didn't give a damn about what anybody wrote about him or anything else. And I think that he's one of my heroes, and I think he's one of Jay Powell's heroes. And I think Jay Powell did the same thing actually in March of 2020 when we went into the pandemic. I think at the annual meeting that year, I said, that he was a hero and he is a hero, and you have to act, and you have to act on insufficient information, and you've got an ultimate responsibility to the American public. It doesn't mean you can stop recessions. It doesn't mean that you can turn bad loans into good loans or anything else. But it does mean that you got to keep the system working. And the system came close to stopping. If you read a book called $1 Trillion Triage, you can get it on a day-by-day account. And people don't know how close it was. And Jay Powell did not call for studies or position papers and, lengthy debate and everything. You just don't do it. You act. And that's what Paul Volcker did. And I thank heavens, Jay Powell was there. I mean, you could have gotten a very different result in March of 2020 after the pandemic broke out.
Did the Fed keep rates low for too long after that?
Who knows? Who knows? We won't know. I don't know what they precisely should do, and nobody does. And they follow conventional wisdom and all of that, and sometimes it works out and sometimes it doesn't. But since 1942, we've made all kinds of mistakes in this country, and we'll continue to make them, but somehow the system works pretty damn well. I'd rather own stocks than bonds over many years. I'd rather own part of America than try to squirrel my money away some other place. I thought, maybe in Switzerland, Credit Suisse or something like that. It just, people are, they don't really get any wiser about this sort of thing. Somebody yells fire, they're going to run for the door. I mean, it's built into, fear is so easy to arouse in people. And you talk about fear about their money, and they don't really understand the system necessarily or anything of the sort, and they can actually, by their own actions, then create what they were afraid of. It's a very interesting phenomenon, and it actually, my dad hated Franklin D. Roosevelt, but so I grew up, first 10 years of my life, I couldn't get dinner unless I said something nasty about Roosevelt or something, but over the years, when Roosevelt said the only thing we have to fear is fear itself, he was 100% right. When he closed the banks and said, I'll open the good ones a week from then, he didn't know anything about which bank was good or bad or anything like that. But people just needed that, get an appropriate confidence. And now they've really got an appropriate confidence because we didn't have an FDIC, and we didn't have an FDIC that was required for every bank. A lot of banks fought the idea. And now we've got a system that works, but people are still scared when they get scared. And being scared is so contagious. You can't imagine what it was like that weekend after Silicon Valley. I mean, the guy that drives me around because I can't see that well, and all he was talking was banking, and he would, what should he do? And it's unnecessary fear is a terrible thing to give people. I mean, and Roosevelt and the New Deal really wanted to get rid of that. And here we are X years later, and we've got a mechanism that's so much better than we had going in, but people really don't quite understand it. And maybe it takes the President of the United States to just go on and deliver Roosevelt's message and make it more clear to people what we really do have and what they need to be worried about and what they don't need to be worried about. But of course, if you're trying to win an election next time, you tell people, that if you're out of office, if you're out of control, you tell them how terrible the other guy is for getting them into this problem. And that's going to always live with us.
So you look around and you're not worried at this point?
Well, at 92, I've got other things to worry about. No, I'm not. I don't worry about our ability. There's things I worry about. Sure, I worry about the nuclear threat. I worry about a pandemic in the future, all kinds of things. But I don't worry about them because I can't do anything about them. But I actually, that's what I originally thought my money could be best used for. But I don't know any answers now after 40 or 50 years of thinking that way. I'm not. I don't worry about. No, I don't. I never go to bed worried about Berkshire and how we'll handle things. If I'm worried about Berkshire, I should figure out something different to do about what Berkshire is doing. But Berkshire is my responsibility, and I think I was very, very, very lucky that Berkshire happened to be in America, and I happen to be an American. I was born in 1930, and I've been in a golden age ever since I was born. The GDP per capita is up like sixfold or sevenfold in one person's lifetime. There's never been anything like that in the history of mankind. And so, we love to complain about wherever we are, but most people don't work on Saturdays and don't work on Sundays, and when I was a kid, everybody worked on Saturdays. And I mean, the world has changed so much for the better in terms of, how well off people are compared to any other time in history. If I'd been born 150 years ago and I went to the dentist, I mean, they'd pour whiskey down me and all kinds of, there's just all kinds of improvements. But it's man's nature to be dissatisfied. And politics does stir that up, and you've got to say, if you're out of power, that the other guy is screwing up and you could do better, and that's just built into the system. But that was the case when I was a kid, and it's the case today.
Joe's got a question. Joe?
Yeah, I love his oblique references to his dad. I like that one. I think sounds like a real solid Nebraskan, though. I think I would have. I don't know. I would like to have had a couple of domestic beers with your dad. I think what I was trying to figure out, Warren, is in your long life where you've seen a lot of different business cycles, and you've seen hyperinflation, and you've seen secular disinflation last forever. What do you think happened this time to get to 40-year highs? It's obviously pandemic related and supply chain related, but do you ascribe anything to the Fed enabling too much fiscal spending, profligate spending by the federal government, or by the government in general? Do you think that added to it, the increase in the money supply, or where did it come from? Why did what engendered it this time around? And how bad is it? How long lasting?
It's fun sending money out to people if you want to stay in office and you want their vote, and that's always been a problem of our political system and around the world, and some countries have just printed it where they have billions and billions of this currency or that, and inflation is a constant threat to a country but so far the United States has done pretty well of that. Now, it's still the case that the price level is probably 15 times what it was when I was a kid. And so, but the interesting thing is, the price of the Coca-Cola is maybe twice or something like that. Main cost is the container, and the price of the New York Times has gone up 40 for one or 50 for one. I mean, it's a very uneven thing, and base commodities tend to move less. But oil was $3 a barrel when I was back when I was managing money at first, and it had been 10 cents a barrel in the East Texas situation in 1931. Now it's $80 a barrel, and I mean, I said in the annual report that Berkshire can offer some protection against inflation, but the effect of inflation can be wild. Some people, if you owe a lot of money, all of a sudden you don't owe anything. You can earn it back in 5 minutes. And on the other hand, there's just all kinds of things, but it's not a good thing for society. And I think that the United States has generally done a pretty good job of keeping inflation from. But I think the people at the railroad.
All right, everyone. So we're going to finish the rest of the interview later because we only have 9 more minutes left for inflation numbers to come out. By the way, if audio is working well, just give me a thumbs up. Just want to make sure the audio in the video is good. How are we not voting? 250 votes only. Come on, folks. We got 10 minutes left. Vote. What is your expectation for inflation coming out in now less than 9 minutes? It's quite an interesting interview from Warren Buffett. I do want to touch on that maybe in a separate video, but he does seem like to be hesitating a little bit. And I was actually going to do a video specifically on his famous quote on to never bet against America. And there's definitely going to be contradictory views because on one hand, you've got Buffett, never bet against America. And then on the other hand, you've got Ray Dalio putting out, the more macro thesis and how, over 100 year spans, 150 year periods, a country can do really well, but then of course it loses its status of the global reserve currency. So there's definitely a lot of contradicting views. I was going to do a video about it very soon, but thank you so much for joining, everyone. We've got inflation again coming out in now 8 minutes pre-market. We do have QQQs slightly flat, just awaiting those numbers. S&P 500 is also flat, not really moving all that much. And the Dow Jones also very, very flat, slightly up over 15 basis points with the 10-year yields pushing up to over 3.45% at the moment. So let me know what your expectations are. And we are all set. A couple things I want to go over. So Cleveland Fed. This is the nowcast CPI. So they have not really been on point with inflation on the way up. They were underestimating inflation on the way down. They've been overestimating inflation, and their expectation for March is a 5.22% for year over year, and for core to be at 5.66%. So that's going to be the expectation. But like I said, on the way down, they have overestimated those numbers every single time. So it's possible that we come in maybe slightly lower, just depending on that quick analysis. And then this right here is going to be inflation expectations from the survey of consumer expectations from the Federal Reserve Bank of New York. And this is also something that I broke down in my previous video. And the expectation right now for the next 5 years has really ticked up. So 5-year detail, if you go over, you'll notice that we have ticked up a little bit. If I could zoom, I can't right now. So February, median expected inflation 1 year forward was 4.2%, and now that's ticked up to 4.7%. So investors or just market participants, consumers are expecting inflation to be more sticky and for us to be almost at 5% even a year from now. When it comes to 3-year detail, you'll notice that they have been coming down. So 3 years later, they're expected 2.8%. I think that's a little bit higher. No, 2.8% is going to be that 3-year expectations and 2.5% on a 5-year horizon. So even on a 5-year basis, we're not getting close to the Fed's target. So this is the expectation coming out in now under 6 minutes, 7 minutes here. 0.4% month over month for core, 0.3% month over month for headline, and year over year 5.2% and 5.6% for CPI and core respectively. So let's see, 315 votes. We need more. We got over 400 people watching. Let's see what the votes are. What do we need for the bull case? Bull case is simply going to be less than 5% for headline and core sitting at under 5.3%. That I think is going to be a very optimistic, very bull case scenario for the market, which I also somewhat doubt is going to happen. But right now it's kind of like a pretty split vote between base and bear case, 33 and 30%. with a little bit of optimistic about 19-20% here. So Oleg says expectations are simple, biggest rally on as a shorts level. So yes, shorts right now, we definitely are seeing the highest amount of shorts at the moment, considering the net short position from the hedge funds, right? So S&P 500 shorts are once again coming down to the same level as we did from back in 2011. I did a video about this in more detail, but yeah, five more minutes left. One of the things I also wanted to mention is that right now it may seem like inflation's coming down, and February, March, April, May, June, you can see that these months last year, inflation was incredibly high on a month-over-month basis. We were seeing 1%, 0.9%, 1.2%. So these were some pretty high numbers. And that's exactly what that paper also suggested, right? That inflation paper that I broke down in a separate video, we learned that that they mentioned in the first half of 23, it's possible that inflation starts to come down because of these higher prints and because of the more difficult comps on a year-over-year basis. But take a look at the back half of this year, or compared to last year, we had August, July, August, September, October, November, December, very, very low prints. So you can see that clear difference between the first half and the second half. And it's possible that in the second half of 23, inflation somewhat becomes stickier, once again, stabilizes, or even starts to tick up higher once again. So we are ready. We are ready with the numbers. So, all right, let's see. Bull case is a fool's case. Yep, that's true. I do think it's not going to be a very likely scenario, but I think a base case to somewhat even, I don't know, bear case is possible, considering the prices of groceries, shelter prices. If they don't pull back, that's going to be a bit of a problem as well. And then, of course, not to mention oil prices. Oil has been pushing higher, although it was in the month of March slightly lower, but gas prices, I think they were slightly higher, 2% on a month-over-month basis. So we're going to find out in about 3 minutes now. 3 minutes. I'm going to do another audio check just to make sure everything is working. And we are all set here. Put the QQQs here, SPY over here. All right, we are ready to go, folks. It's going to be quite interesting how the markets react, because this is pretty much going to lock in what the Federal Reserve does on May 2nd and May 3rd, right? That's when the next FOMC meeting is. So, and then of course I've got the Fed Watch tool here. Probability right now still 70%, 75% expecting for a 25 basis point hike. If numbers come in hot, that's going to pretty much be locked in. If numbers come in soft, it's possible that we kind of waver a little bit back and forth back to no hike scenario. Vote, vote, vote. Let's see if we can get up to 400 votes at least before the numbers come out. We've got 2 more minutes, 30 more votes needed, so we can get up to 400, and we'll have a good data set on what people are expecting at the moment. $374. Let us know what your expectations are. And then I'll play this as soon as they're back, and we'll reload this right at 8:30 a.m. Eastern. So Boba, I've already shared my opinion in my other videos. I've already done several videos on inflation in the past leading up to these numbers, but I am a little bit more leaning towards the short side, just considering the digital price index, the DPI from Adobe, and of course the other analysis with respect to grocery prices, shelter prices. So I would not be surprised if we kind of hit that base mark on CPI or even a little bit higher. All right, I'm going to shut up. I'm going to play that now.
Three on the NASDAQ, 5 on the S&P, if you're in a car, on the radio. And the 10-year note, give you a quick read on that. The 10-year, 3.447, and the 2-year, 4.071. We've done this before. We've seen this movie before. Rick Santelli is standing by at the CME in Chicago. And Rick, in the past, you have emphasized that the actual number that we see, if it's like a tenth hotter than anticipated, you historically look back at where it was and how far we've come to give it some perspective a lot of the time. What you think you might be doing that again today, or because people want it to continue to cool? They don't want it to just be lower than it was a year ago, but still stubbornly high. Do you think we get any relief today?
Yes, as a matter of fact, if you look at the year-over-year numbers since their peaks, so the peak was in June for year-over-year headline, the peak was in September of year-over-year core, they have been moving lower every single month since those peaks. So that is good news. The bad news, CBO tells us that every man, woman, and child owes $3,000. We're at 1.1 trillion fiscal year through March, which is well ahead, almost a $500 billion ahead of last year. So spend makes the Fed probably have to stay higher for longer. And the numbers are out. Our March release of Consumer Price Index expected up 0.2% is up 0.1%. High watermark was 1.3. That was in June of 22, the highest since 05. And since then, the lowest has been 0. That was July of last year. If you look at ex-food and energy, expected up 0.4, exactly up 0.4. High water mark, April of 21, up 0.8, highest since 81. Since then, the low has been up 0.2 in August of 21. The biggies now. 5% year over year. That was expected to be 5.1. And the rearview mirror still is 6%. And every single month, as I said, since June when it peaked at 9.1, July, August, September, October, November, December, January, February, now March, have been lower. And if we look at 5.6, to year over year core, maybe the most important number here. Here's where it gets interesting, Joe. 5.6 expected, 5.5 in the rear view mirror, gone down every month since September when it peaked at 6.6. This is the 1 month where it popped 1/10 higher and it breaks that streak. Now, many have said it doesn't need to be linear. I totally understand that. We could look at 1/10, but if you take a bigger picture, we have made progress, but it really does become, and I'm so interested in how the Oracle of Omaha looks at this, it really does now become an issue of spend versus does the Fed tighten? How do they view the banking issues? And what rate is going to be high enough until we know what's going on with the budgets? Yes, go on.
Incredible moves in gold, in the dollar. It all sort of looks like it might give the Fed some breathing room. That the 10 years down,
like
10 years, futures went, the stock futures went up immediately, gold went up immediately. It all sort of, there's
a two-year
note.
A 2-year note is at 392. It's down, 14 basis points? Yes, and we've gone from, we're at 337 now in the 10. That was well over 344. So, Joe, the markets are speaking loudly. I think we need to go back to Becky. At least I'm going to toss it back to Becky. We're all anxious to hear how Warren Buffett's going to respond to the big pop in the futures for equities and the big drop for interest rates. Becky?
All right, Rick, thank you very much. We were listening intently to all of that. Warren Buffett is standing by, too. Warren, what do you think?
Well, Becky, on Good Friday, I was working. Mark Millard, who handles all the bonds and stock trades for all of Berkshire, was there. And I knew I was leaving town on Sunday night. And Mark says, what do we do next week? And I said, here's what we do. And on Monday, we always buy Treasury bills. We bought about $2 billion of them. We got a 4.99% bond equivalent yield. But the only question is whether we buy 3 months or 6 months. And I tell him use his own judgment on that. So Monday, I was here, and he sends me a sheet as to what we did. And I don't change anything. Tuesday, he does the same thing. And net, we happen to be a net seller of $300 and some million, but we could have been a net buyer of $500 million in stocks. And And I am not going to, I'm going to be traveling tomorrow, and he's going to be operating on Wednesday, and I'm not changing any instructions to him. He's going to keep doing what he's been doing. I mean, we don't make our decisions as to whether to own part of a company for the next 20 years. We don't have any idea what anybody's going to do next week or next month. And when I was buying Berkshire between 1962 and 1965 of control, it didn't really have anything to do with whether, all kinds of things were happening in the economic markets all the time. But we haven't changed our course, in 58 years. And we just want to buy good businesses, and we want to buy people we like and trust, and at a decent price. And we'll keep doing that. And we'll keep buying Treasury bills every Monday. And we haven't missed a Monday yet. And we keep all our money short, and we keep it in Treasuries. And we were getting 4 basis points, which was $40 million, $100 billion worth, and now we get almost 5%, which is $5 billion. So we've got 100 times the earnings. But it doesn't make any difference. I mean, that is there to be the strongest company you can imagine, and also to take opportunities when they come along. But Mark, if you're listening, just keep doing the same thing you were doing yesterday and the day before. and I could go away for a couple of weeks, and I would tell them, here's what we want to do on the buy side, here's what we want to do on the sell side, and just keep doing it. And that's what we do. And some periods, there was a period about a year ago, I mean, when incredible volumes were, we bought 20% of a company that already the index funds own, 25 or 30%, Dodge and Cox own 10%. We bought 20% of a company in a month or something like that. Now,
Accidental, is it?
Yeah, it was accidental, and we were doing other things too. But now it's a different kind of market, and we can't acquire it the same if we're buying an accidental or if we're selling something else. But we'll just keep doing that. That's what we've been doing for 58 years, and I can't tell you what the Fed was doing when I was buying Berkshire day by day or week by week or month by month or year by year. We were buying Berkshire, and we've kept buying things, and we don't make stock market guesses, and we don't know how to profit by looking at broad statistics and guessing what stock markets or bond markets will do.
But you have said that you do pay attention to interest rates, and that interest rates are like gravity on equity prices.
There's no question about that. I mean,
so where's the level of gravity? Are we on the moon? Are we on Earth?
Well, we're in a way different position than we were when essentially what the option was to get 4 basis points on bonds, and that changes the value. It changes the value of real estate, changes the value of equities. It changes everything. But that's all happened in my lifetime, various ways, all the way up to a 21.5% prime and down to 0, which nobody thought we would ever get to. You can read the economic textbooks of like Paul Samuelson, the wonderful man, and it's a 900-page textbook that every kid went to school with, and you look for negative interest rates in the index, and there's not a word on it. I mean, so anything can happen. And we're prepared for anything, but we like to do things. Over time, we want to buy good businesses. It's that simple, and we always want to have money.
Andrew's got a question, too. Andrew?
Hey, Warren, this is actually a question that sort of moves where the economy may go, and it's a question around technology, which is, I know, a space that you don't always want to go to, but I also know one of your best friends is Bill Gates, so I'm curious if you guys talk about it. We keep talking about ChatGPT and potentially how that could transform AI, how that could transform our economy in the future. And obviously, there's also lots of questions about whether AI is dangerous and we have the right policy set around it. And I was curious if you've given much thought to any of it.
Well, I think it's something I don't understand at all. But Bill did come by about, 4 or 5 months ago, and he said, I'm going to show you the latest thing, what can be done. And then he, I actually said, take the song My Way and write it in Spanish, and have it encompass my views on what's funny or what's likely to happen in the economy. And 2 seconds later, it comes out that rhymes and does all these wonderful things. And but he told me, he said he can't tell jokes, which I thought was very interesting. And, it just doesn't know how to tell jokes, but it can tell you, it's read every book, every legal opinion. I mean, the amount of time it could save you if you were doing all kinds of things is unbelievable. But what I said to Bill is, I said, just let me know what I can ask. You know, how are you going to ruin the human race? And then let me know, someone unplug it or whatever I have to do at that point. And of course, I'll be programmed so that nobody thinks they should unplug it or something. I'm thinking. So I don't really understand it. I think it's an incredible technological advance in terms of showing what we can do, but I don't know whether we know what happens. And I was listening, who was it the other day that was, who knows a lot about technology? He just says it, it scares him. Well, if it scares him, it scares me in terms of the possibilities of it. I mean, we've done amazing things, like we figured out how to create an atom bomb back in 1945. I didn't know what an atom was or anything, but Einstein told me it was going to change the world, and it changed the world. So I don't want to change the world too many times without having some idea of the consequences of it. And I think this is extraordinary, but I don't know whether it's beneficial.
Was it Steve Wozniak?
Pardon me?
Was it Steve
No,
Wozniak?
it was Eric Schmidt. And Eric was saying, we don't know where this takes us, and maybe we ought to pause it for a while. Well, right. I don't know 1/100th of 1% about physics or anything else that Eric knows, but I come to the same conclusion.
Look at you, Warren, watching Squawk Box from Tokyo last night, it sounds like, because Eric was on talking about that on the broadcast. One other question for you, Warren, because we always ask you, I don't know if that's where you were watching it, but he was talking about it just yesterday with us. But separately, we always have a Bitcoin question for you. But I've been thinking about. Okay, I was thinking about this with you, Warren, and I know your views about Bitcoin, and I've been very surprised at how Bitcoin's come back up to close to $30,000 again. When you go back to the Tulip Mania went from 1634 to 1637, only lasted 3 years. And here we have, if you're right about Bitcoin, something that's now lasted something along the lines of 15 years. And so I've been trying to understand if, in fact, you're right, and this is not just rat poison squared, but is not a thing, when it would be unveiled as not a thing.
That's predicting when speculation will end, or when the gambling instinct will go away, and when more people want to get out than are getting in. And I have no way of, if I thought I was good at that, I'd figure out a way to make a lot of money and different things. All I'm trying to do is buy good businesses. But the one thing I know is I didn't like chain letters when I was a kid. I thought, why in the world should I send along a chain letter to the next guy when I could start my own? I mean, I've seen people do stupid things all my life, and I empathize with that. I mean, people like to play the lottery. They're going to get 60 cents back on the dollar or whatever the number may be. And states, essentially, the numbers racket was something that you avoided. And then the government decided it was a source of revenue. And it's very hard to tell people that if they're going to put a tax on essentially a sure loser for society, for the gamblers on the lottery on the whole, but they're appealing to the gambling instinct, and it spreads. I mean, people love the idea they're going to make more money tomorrow, and it really drives them crazy if their next door neighbor is making a lot of money not knowing what they're doing, and they're just sitting there, and their spouse is saying, why is that guy getting a second car, and why are we missing this whole thing? And the gambling instinct is so strong. And you had millions of people that were getting checks in the money and sitting home and finding out that they could have a roulette wheel in their house, and they had all the appeals of gambling and that are used to get people to go to Las Vegas, and you can do it in your home, and they have money, and we've had an explosion of gambling essentially, and I like to bet on a football game if I'm sitting and watching. It makes it more interesting. But I don't think I want to make a living trying to bet against the house ever. I want to. If I were to get into gambling, I would want to own the roulette wheel and not be a roulette player. But we haven't done that. But people all the time. Well, actually, on my honeymoon, in my first marriage, we're talking when I was 21, and we went through Las Vegas population of about 20,000, a bunch of fellows from Omaha and other places had bought the Flamingo after Bugsy Signal met his maker sooner than he expected, and they welcomed me in because they all knew my Uncle Fred. And I looked at all these people who had flown thousands of miles to do something unintelligent as fast as they could. I mean, they couldn't, they thought the dice were hot or something like that. And I thought, I'm going to get rich in this country. I mean, if that's what people do, I can be smarter than that. I mean, so I've watched it ever since, and it's fascinating too.
All right, everyone. So that was a very, very long interview with Warren Buffett, like over an hour long. It's been going on. So Becky Quick in Tokyo, she's been interviewing Warren Buffett for quite some time. Lots to unpack, lots to break down. I'm definitely going to be rewatching it on my own time, and we'll be doing a whole summary. Got a whole separate video coming out on the US and, of course, some of the other macroeconomic challenges the US is also facing. But circling back to CPI coming in, a very, very strong report. So we did beat on our expectations for headline. Core came in line with expectations. So month over month, 0.1% increase for headline. 5% is where we're at on a year-over-year basis. And ex-food and energy core coming in 0.4% month over month and increasing to 5.6%. So we did see that crossover happen for both headline and core. You can see that intersection where now headline is lower than actual core CPI on the back of shelter prices. Why? Because if you take a look at headline, we did see food at home decline 0.3%. Energy was down 4.6%, so helping headline come lower. But if you come down to shelter prices, they're still elevated. Shelter prices still up 8.2% on a year-over-year basis, and they're up 0.6% month over month. Annualized, that is 7.2% on a forward basis. So energy prices in the last 12 months, negative. So we're seeing deflation in energy, and oil prices are down. Food prices are still elevated. So we're still yet to see some more momentum to the downside for food, but it really is going to be that core number, which is still hurting on the back of shelter prices and, of course, housing, which is still relatively more expensive from same time last year, getting that boost back up to core. Now, when it comes to interest rate expectations, let's just do a quick refresh here, see what the market's pricing in, and we're still pretty much pegged for 25 basis points, 64% probability. And if we come over to future probabilities, they're expecting a hike and a pause, and then 1, 2, 3, 4, 5, 6, 7, 8, 9 rate cuts priced in over the course of next 14 months, all the way through September of 2024. So, on the wheel, yes, Warren Buffett coming in with some very, very good stories and analogies, and of course, taking some shots at gamblers and Bitcoin, and of course, a lot of different things. Yeah, Ballboy says, Warren Buffett is just right about the gambling instinct, 100% true. Yep, so Warren's a national treasure, Kevin says. Yeah, definitely, have a lot of respect for that guy. I mean, one of the greatest investors of all time, absolutely been killing it in the markets for over 50 years. So definitely when he talks, people listen. That's why I wanted to play that and stream it for some time, because hey, you've got inflation and you've got Warren Buffett's live take. What can be better? Anyway, so QQQ's gapping up 80 basis points right now. Very much a strong gap to the upside. Now we're starting to trade a little bit sideways. SPY's up over 70 basis points. Yields dropped immediately, rightly so, down about 1.5%. But what's also interesting is that oil prices pushed up to $82 a barrel, and we also saw gold prices push up to over 2024. So we saw both gold and oil prices push higher. Volatility at some point was green. When I looked at it earlier, it was up 4%, and then it immediately came down to being negative 2.77%. And the dollar index is once again weakening. It is down about 0.5% and coming back down to under 102 at the moment for DXY. So lots of individual stocks green. So Tesla's up 2%, getting back up to 190. We got Google here up 1%. We got Apple 0.5%. Microsoft up a little bit over 91 basis points at the moment. So pretty good CPI numbers. PPI is going to be tomorrow at, again, 8:30 a.m. So we will be live for that as well. We'll see what the PPI numbers look like. But let's just see some of the comments here. So Elvis says, I really got this feeling we will end the day really, really red. All right, let's just do a poll right now for the markets, right? So markets today, now that we know the CPI numbers, we can start to do that poll for market expectations. So red, green, and flat is going to be the questions here, and make sure that you participate and vote, and also drop that like button. Really appreciate it. Yes, FOMC meeting minutes are also coming out. FOMC minutes come out at around, I think, 2:30 p.m. So yeah, 2 p.m. Eastern is when they come out. And Mary Daly's talking at 12 p.m. Eastern. We got a Treasury statement coming out. And let's take a look at mortgage applications as well, because that did decline last week. But for the last couple of weeks, it's been increasing. Then last week it did decline because interest rates are still relatively higher for mortgages. It's going to give it some more insights. Okay, so we're seeing a week where we increased 5.3%. From last week, and purchase index also increasing 7.8%. Refinancing activity pretty flat, not really increasing all that much, only a 0.1% at the moment. Now, GDP expectations for the first quarter are sitting at 2.2%. So that's going to be first quarter 2023. And we're going to get that first estimate very soon. Okay, so Friday, April 14th, is going to be the next GDP Now update, but I believe we're going to see that first update for the first quarter GDP numbers coming out very soon as well. Inflation expectations have already gone over. Fed Watch tool have already gone over. And now we also have the poll. Let's just see here. Would it be potentially bullish in the midterm and long term if the U.S. defaults? Because it could mean that the U.S. would stop overspending and start being successful in paying off the debt. Tristan, I don't think so. I don't see any scenario where the U.S. defaults on the debt. Gets a downgrade from its rating agencies on its sovereign debt rating, and then the market sees that as a positive. I can't imagine a scenario where that ends up happening, because the debt is astronomical. And by the way, Warren Buffett has been investing in Japan, right? He's been investing in trading houses over in Japan. His exposures increased from 5 to 7.2%. That's one of the reasons why he is in Tokyo. I'm going to be doing a video because there was some quite interesting, when talked about, some of the things that worry him. He did talk about the pandemic. He talked about nuclear threat, but he was in that question. If you guys notice, he was hesitating a little bit, right? He wasn't really saying things as openly as what I've seen him before. He was kind of like holding back a little bit. So I really want to dig in a little bit in that. And so do you have a delay on your stream? So no, it should be pretty live. It should be good. We are live. So Sonic says there's no other explanation that the US dollar being artificially inflated while at the same time increasingly losing world reserve status, given real inflation is a direct reflection of the currency's value. Yeah. So I mean, at the same time, there's a lot of other currencies that have lost value, right? It's not just the US dollar. A lot of currencies have lost value to inflation. And most currencies do devalue over time. And the US is still considered to be one of the more stronger currencies against, a lot of other various currencies in the world, like such as the Indian rupee. Again, you got the Brazil, you got Euro, you got, the China yuan, yen, all those currencies still relatively stronger. But I think there's always that element of that debt to GDP, the amount of debt and interest payments and interest expense, the fiscal deficit. Those things definitely are at an astronomical level in the US compared to any other country out there. So we're going to definitely be talking more and more about that as time goes on. Yeah, oil ETFs are up a lot. Shopify has winner of the day in my portfolio, Anthony says. So let's take a quick look on some of the individual stocks here. Shopify pushing up 4.5%. So very nice move. Tesla, we've got a resistance in roughly a 210 to 215 inside this red rectangle is going to be the one to watch. And then let's take a quick look on Microsoft. And right now we are up 1%. Resistance is going to stay up at a 292, 293. Nvidia is the stock that just is reluctant to come down. Definitely pushing higher on low volumes as it has been going up. And resistance is going to stay up at roughly a 292, 293. It's going to really be interesting how we close today, because again, it doesn't really matter how we gap up or gap down. What really matters is how we close, right? As I mentioned before, intraday price action matters more than the pre-market, post-market. So right now we've got 66% of the participants expecting the markets to be green. Chinese yuan or yuan or yen, renminbi, whatever it is. It's so many different words. So Tristan says, I think it would be terrible in the short term, but bullish in the long term. Yeah, I mean, if the U.S. obviously improves its fiscal situation, that is definitely going to be good over the long term, because think of it as just a balance sheet with a lot of debt, and they're going to eventually start to pay down debt, but it's going to come at a huge expense. It's going to come at a huge cost, because the way the Treasury Department can lower its the number one way the Treasury Department can generate a surplus in the first place is by either increasing taxes or lowering spending, right? And both of those scenarios are very, very bad for the morale, considering what people are accustomed to, right? So worst thing Treasury Department can do, increase taxes, right? Nobody wants that. Or if you start to lower spending, that's going to immediately reduce the standard of living in that country, right? So you can either play around with the income, which is the taxes. Nobody wants that. Or you can play around with the expenses and lower those expenses, which is going to lower the standard of living. So that's the surplus part. And then once you start to have that surplus, then you can start to pay that debt down. So it's a very, very problematic situation right now. Got my spacesuit on for today, Kevin says. So, yep, we're going to the moon, it seems like. All right, so if you have any questions, let me know. Apple is really weak. A weak leader unable to lead the stock market. Close green today. So, yeah, Apple also is now starting to be a little bit more on the overbought side, no doubt about it. RSI, MACD on the daily chart also coming up to that level. MACD starting to break below that signal line. Support level is going to stay put at 157, 158. And of course, we got a resistance all the way up to 167 inside this downtrending channel. You can perfectly see where we got rejected more recently, right? 167. It was kind of inside this downtrending channel of lower highs and lower lows. So support level is going to stay put at 157, 158 for Apple in the near term. But of course, if we see a breakdown below this level, it's possible that we see lower lows for Apple. So one more thing that I wanted to remind everyone is that, yes, right now we're seeing a significant decline in inflation. And again, in that research paper that we broke down, that pretty much suggested that that's going to happen in the first half of 2023. So just want to caution everyone from calling the victory too soon, because core, again, pushed higher, right, on a year-over-year basis. So we still have core CPI stabilizing a little bit. You can see that it hasn't really been trending lower. The only reason for the headline to come down is energy. Energy is the only reason why we've had headline come down, and a little bit of used car prices. So this script can flip, just cautioning everyone. I'm not trying to be pessimistic, but just cautioning this script can flip if oil prices continue to move up. That's why I did a video on oil and why this is alarming. In the first place, if supply cuts continue to happen, oil prices overall move back up, gas prices move back up, it's going to be a bit of a problem, because core, as you can already see, is stabilizing and ticking up. Headlines coming down. Why? Because energy prices are down 17%. So if that flips and shelter prices and food prices don't come down fast enough, it's possible that we remain elevated. Because if you come back over to BLS website and you come over to charts, you can see which has what sector, what area of the market really has been coming down. So you come down to energy, look at that drop, right? Substantial drop from 41% now in negative territory, negative 6.4. So that's the main reason. And you can see from back in June. June is where we peaked. You can see that, right? June over here, when we peaked at over 9%. Since June, energy prices consistently coming down, and so has headline CPI. So it's a pretty significant correlation between oil and overall headline inflation. And that's not the story with core, right? Core, you can see from June, is actually higher from where we were last June. Slightly lower, but it has stabilized, right? Pushed up, came down, stabilized. It hasn't come down. So just something I wanted to point that out. Shrimas, hi Gary, how are you doing? Finally, bull market is coming back. So I think a lot of it is going to depend on earnings too, because if earnings can hold up pretty well, then I think the multiples are strong. If the earnings are not strong or not good enough, the multiples are still pretty expensive. And just like I mentioned about inflation, keep a close eye on oil prices because that's really what's going to dictate headline inflation. Shelter's still a big proponent of overall inflation in terms of 30% of CPI being accounted for with shelter, but we haven't really seen shelter prices roll over at all. I mean, they're still up 8% year over year, and just in this month, they were up 0.6%, annualized on a forward basis, up over 7.2%. So shelter prices still elevated, food prices slightly coming lower, but still up year over year. Energy is the big reason why headline has been coming down. So keep a close eye on this because this is really what's going to dictate where inflation goes. So anonymous caddies, is good or bad? Just joined. So it was, I would say, it was good on the headline numbers, but the core number came in line with expectations, and the fact that we ticked up on a year-over-year basis for core just goes to show that we're very much stabilizing right now, right? I mean, ideally we would have want to see 5.6%. This number come down to under. Our previous number was 5.5. Ideally, we would want to see this number come down below 5.5%, meaning that we're still moving in that trajectory downwards. But the fact that it actually ticked up is not the best news because we ticked up here, right, from June, July, then August, September, we were a little bit higher. Then we started to come down. The rate at which we were coming down was also slowing down. And then once again, we ticked up a little bit. So I would say it's a good report. I would give it like a 6 out of 10. Good for headline, not so great for core. What's the CPI number X everything? Excluding everything? Like, what are we accounting for here in CPI? So Bitcoin here is slightly down. I wouldn't call it necessarily Bitcoin coming down hard, Haas, because it's only down 20 basis points. Yeah, Nick explains the position or recent OPEC Plus action to cut production to bring oil prices back up. Yeah, that's why, keep a close eye on this. If it gets back up to $90 to $100, it's very much correlated with inflation, right? In that video, I specifically went over a chart that has the year-over-year inflation and it has the actual oil prices. They are literally identical. If you go back and watch that video, both of those charts are identical. If oil prices go up, inflation goes up. If oil prices come down, inflation goes down. So that's why it's a very important metric to watch, especially for headline CPI. Not so much for core because it's been excluded. Food and energy has been excluded. So Ray, are you exposed to crypto? Not yet. Not directly exposed to any crypto. Just holding on to a little bit of Marathon. And that's about it. Marathon was up 12.5% yesterday. Pre-market slightly down. It has pushed up quite a bit. So this is the only crypto-related stock I'd say I own, but a very, very small amount. But eventually I do have plans of maybe diversifying a little bit into Bitcoin. Not a whole lot, right? Only 1%, 2%. As Warren Buffett literally just mentioned, that it does not have any intrinsic value. And that's one of the things that, I've mentioned in my previous live streams as well. It's kind of difficult to figure out what is the fair value of Bitcoin. Like with a stock, we can figure out the fair value based on the future cash flows, based on the future earnings and dividends, and we can discount it all back and really put together a very calculated idea. Okay, this is how much this asset or this business should be worth. With Bitcoin, you can't really do that because it has no cash flows. It has no intrinsic, quality that you can quantify except for the demand and supply and the limited quantity that it has. So it's not going to be a big exposure. It's only going to be a little bit, but Alex, I would say like less than 1%. It's very small. What price should we enter Marathon Digital? So really, for Marathon, I feel like a lot of the move has happened in the last few months. It's already pushed up. But really, you got to ask yourself, like, what's the goal? Are you trying to get exposure to Bitcoin? Are you trying to get exposure to a miner? because there's a lot of other companies like Coinbase, for example, is like an actual company that allows people to, trade crypto, invest in crypto, all that stuff. Marathon is strictly for mining crypto, and so is Riot. And CleanSpark, I think, belongs in the same category. But then, of course, you've got Grayscale Bitcoin Trust, which very much tracks the Bitcoin exposure, or very much the underlying asset, which is Bitcoin itself, and it's up 140% from those levels. I think it's almost similar to what Bitcoin is up. So from these levels, up a little bit more than Bitcoin. So so it really depends on what your goal is with respect to Bitcoin. Anonymous, fair value. Crypto has no earnings, no management team, and no product. Kevin says yes. And that's a little bit difficult to quantify, right? I mean, how do you de-risk something that has little to no intrinsic value in terms of the earnings or cash flows or anything like that? So Tesla is still charging up. Let's take a look at Meta. How is Meta doing here? Up over 87 basis points. Advanced Micro Devices up 1%. Nvidia is up 80 basis points as well. We're seeing a lot of momentum to the upside for tech. We're going to find out if this actually does last or not. Sam, are you still waiting on Tesla to go down to 170? So for selling puts, yeah. I mean, if it comes down to 170, I'd be interested in selling puts. Not really 170, maybe even lower, because I looked when it was at $176. I looked at the premiums; they were not that high. So yeah, I mean, in terms of selling cash good puts, yes, I'm waiting for lower prices. But if it keeps going higher, I have no problem, because I have a pretty sizable position on Tesla already, and we'll be looking at selling covered calls on the next big green day past $200. So that's the beauty of Tesla trading sideways, is that I can trade both ways, right? Going down, great. Going higher, great. Doesn't really matter. So not really necessarily waiting, but depending on how it trades, I will just pivot the strategy and do something else. Mason, Caddy, what do you think about the bond market? So in what perspective? Like in terms of what's the specific question in terms of the bond market? Losing steam, you might finish flat or even red, Alex says. The core CPI spooked the futures. It was truly positive. You would be up 2% by now. Yeah, I mean, like I said, we'll see how the day closes, right? It's not so much about the gap up or the gap down. Really, what matters is how we end up closing the day. S&P's, giving up on some of the gains. Sold off about 0.5%. NASDAQ is down about 61 basis points as well, but we're still, very, very much green to the upside. So I'll continue to monitor how we trade here in about 23 minutes. Do you think Meta is closing in to a sell around 225, 230? The risk is kind of getting elevated now. So yeah, if you're getting overweight on Meta, it is overbought, no doubt, and resistance is at 222. We've got a huge gap to fill, somewhere between 248 to as much as 288. This is the gap that Meta first, when it announced those earnings, absolutely got destroyed on those earnings, but the recovery has been incredible from the company. It's rallied over 150%. 220 is going to be that resistance, and beyond that level, I'll be watching 238 as another resistance. And yes, if you are overweight or want to trim, I certainly will be selling some calls past this breakout in order to get rid of some of the position. I will be doing that past this level. You feel like this is a good moment to buy more dollars to invest in the market in the near future. So Walt, do you mean like just investing in the US markets, or because are you investing from overseas? Because then you'd be buying dollars to invest in the US markets. That's pretty much what I also do, but is that what your question is? So Tristan says need higher rates for longer to balance out the housing market. Yep. So we're already starting to see some cracks in the housing market, right? I mean, it's clearly more affordable to rent right now than it is to buy. Price to income ratios have skyrocketed. We're seeing the first ever decline in prices on a year-over-year basis since 2011. Mortgage applications are down. Purchase index is down to its lowest level since 1995. So the only few things that are still going strong in the housing market are the fact that houses under construction are still strong, and construction employment in itself is pretty strong as well. But we're also seeing the building permits come down. So eventually, I do expect housing prices to also roll over. Synonymous, Meta didn't even work for this rally, to be honest. At least Nvidia did have a solid reason. Well, the thing is that I could make a case for like Meta and then not for Nvidia. But like, look, I was long on both. I had both companies. I still do. Nvidia did trim a little bit, but Nvidia, I mean, for the most part, rallied on this artificial intelligence hype, right? Nothing really materialized to a point where earnings were booming, right? It wasn't like earnings all of a sudden 3x or 5x for the company, and that resulted in this huge rally, right? Valuations got way too overextended. But Meta just got way too cheap to begin with, right? It was starting off with a really, really low base. And even right now, after 150% rally, I would say it's fairly to somewhat slightly overvalued, right? In terms of the valuation. But it's not extremely to a point where it's trading at 30 times sales or 80 times earnings, right? So, I mean, fundamentals and valuation, like the numbers are right there. So, and I'm not complaining. I'm happy. NVIDIA rallying 200%, that's great. But at some point, we got to also ask ourselves, what's the actual reality there? Okay, so I mean, I'm from Poland, so I need to buy currency dollars. I'm watching what happens in USD PLN, and it was really a bit bad in the past months. Today it looks really good, but maybe it'll go lower. Yeah, I mean, in terms of currency hedge, you got to really do some calculations and got to understand, okay, so if you are, because I do that all the time with the Indian rupees because I'm buying every month, I'm buying dollars. For now, I don't know if that's going to go on for longer, but right now I'm still, buying dollars, and I rarely pay attention to the currency hedge because I know that if that money invested in US dollars in the US market is going to yield much better because the US dollar has been strengthening against the Indian rupee since as long as I can remember, since, long before I was born. It's been strengthening against the Indian rupee. So I don't think about it twice. But yeah, I mean, if your goal is, we've already done a video about it, right? It's quite an interesting topic, foreign exchange. Maybe I'll do some more videos on the macros and how they actually work. But if your goal is to actually spend in a country that has a depreciating currency against the US dollar, it makes a lot more sense to be an investor in that appreciating currency, which is the US, and then, obviously bring your earnings back to the home currency and then spend it here, because then you're getting the benefit of both an appreciating asset, which is a stock that you're investing in or whatever, the markets, and the appreciating currency. So you're getting a double return if your goal is eventually to bring it back home and invest and spend here in that home country. But of course, in that sense, if you're in the US, there's a little bit of disadvantage there because you're already part of one of the strongest currencies in the world. So you don't get the benefit of that currency appreciation. So so this reaction is exactly as it should be. It's good news, and the market is reacting as such. I feel like lows were already made. Yeah. So, I mean, markets are definitely reacting to a very good headline inflation number. And, of course, we're seeing a lot of momentum back up. So, again, we'll see how the markets trade intraday as opposed to where we gap up or gap down. Bhavneet, any particular stock you're looking at for the wheel strategy? Please don't say Tesla. Unfortunately, Tesla is the one. Man, I can't. I'm sorry. I just, the premium, maybe NVIDIA in the future. NVIDIA, Tesla are two companies that are definitely at the top of the list for when it comes to running the wheel. It is going to be a lot more volatile. I'm going to be straight up. So they're definitely a lot more volatile, which is why the premiums are higher. But I'll also be running it on Apple, on Google, on AMD, like on Amazon. So rest assured, it's not going to be those two companies only. It's also going to be a lot of other ones. But I'm a lot more inclined to just doing it on Tesla. Why PayPal can't catch Steam? Too expensive. Competition, recession concerns. Yeah, I mean, it's I don't know. The volume is not really there. I mentioned this in our Discord earlier. It's surprisingly the volume is just not really there for PayPal right now. Just moving sideways. I mean, we did get a nice burst for PayPal here, 30% move to the upside, and then ever since it's sold off, we've just been consolidating sideways since like end of February, right? So we haven't really gone anywhere for PayPal. So this is like the monthly chart. And you can see that, from May 2022, it's pretty much at the same level as right now. We're at the same level as, going back as far as May. So it is quite an interesting stock right now. Nima's asking for Tattooed Chef. Do you personally own Visa stock? No, I don't own Visa. Tattooed Chef here. Hey, it had a very strong day yesterday, up almost 5%, and right now just consolidating sideways. So not bad. I've done a video on Visa in the past, several videos. Or no, Tattooed Chef. Done several videos on Tattooed Chef and Visa also, but resistance is going to be at 234 for Visa right now. Tattoo Chef is Caddy's favorite stock, as Kevin say. Yeah, I still need to try what they actually make, what the hype is all about. I still need to try one of their bowls or one of their pizzas or something, so I can appropriately judge if it's worth $5 or not. I've heard the quantities are quite small. Nobody says I'm $2 up in INDA. Let's go. Let's see how INDA is doing right now. It's up 50 basis points. So this month it's up about 1.8%. It has been selling off, right? So it's still down 17, 18, 19% from its recent highs. That's because the Indian markets have been pulling back. So Nifty at one point was down about 11%. Right now still lower, 6%. And the Sensex index also at one point was down 10 to 11%. It's a little bit more volatile because it's more concentrated, so that is something to keep in mind. But on the upside, of course, it does rally quite hard, 150%. Caddy, do you adjust for dividends when looking at charts? Yeah, so I believe TradingView does adjust for dividends every time I'm looking at. Yep, so it says adjust data for dividends. So yes, it does. Alonzo, wait, you're telling me it's not a tattoo company? No. Any reason about not owning any Visa? So I did have Visa in the past. It's just, I think, a matter of the valuation that's been a little bit more on the expensive side. So let's take a look. Yeah, 32 times earnings, 15 times sales. That is pretty expensive for the company. And margins are phenomenal, right? I mean, Visa, if you have a company, shoot for the margins like Visa, because you've got 50% profit margins for every $1 in revenue this company generates. 50 cents literally is profit, not gross profit, not operating profit, but actual net profit. Margins are incredible for Visa. But again, trades at a pretty expensive valuation. Caddy, what's wrong with Vish? Wish.com, huh? Really going after this company here. Context Logics. Wow, down another 8%. The pattern speaks for itself. You got nothing but a downtrend. A consistent lower highs, lower lows since 2020. So I think it's lost like 90% of its value. Wow, 99%. Wait, what? It was at $1,000 at one point? That has to be a split. Yeah. Okay. 1 for 30 split is what they announced today. I think it's probably because they need to maintain that regulations with the NASDAQ so that they can still be listed. Otherwise, they'll be kind of moved to an over-the-counter stock, OTC market. So I think because they were trading at around, I think 40 or 50 cents or something, right? So 30 cents they were trading at. Um, 300 calories for $5. I got some Tattoo Chef food from discount grocers for $2 at times, though. It's bad sign if your food is at a discount grocer. Nima, did you end up buying XLF on the dip? So I actually have FAS, not XLF. I have FAS. So this is the one that I own right now. This is the trade idea setup that we had, or we still have. Show you share dilution. So Bhavneet, you can simply go over to statistics for any company. So let's just do JP Morgan. You can go over to the statistics here. And over here, total common shares outstanding, annual. And this shows you the share count over the last 6 years, 7 years for that company, right? So this, for example, has been coming down. That means JP Morgan's been buying back shares since 2016. It's gone from 3.5 billion to under 3 billion shares. Could UNH ever come down? We be the bear case since insurance companies always raise prices on everyone all the time. Greedy insurance companies. Let's take a look. Wow, so it has definitely been pushing higher. It's a bit on the overbought side. I would definitely consider this as a potential short idea at roughly around 550s. So this right here would be a resistance to watch. And if it continues to charge like this, I think it'll make for a good trade on the short side. So Jeffrey took profits in FAS. Thank you. Well, you're welcome. Glad you were able to make some money. And I'm going to be potentially selling some more of that position today, considering it's definitely pushing higher. So we'll be locking in some more profits. TMF, I did exit yesterday. The entire position will be reconvening a little bit at lower yields, right? So if it actually at higher yields, if it continues to push higher, we'll be looking at getting into TMF once again. But for now, I was happy to lock in some profits there. All right, so we got about 8 minutes left for markets to open. A very green start to the day, it looks like. We are seeing Google, Microsoft, Apple, Amazon, Tesla, all pushing higher on the back of these very strong and beautiful inflation numbers. So we're going to put the S&P here, the NASDAQ, and the Dow. Remember, S&P still is going to be battling through that resistance inside this bear camp, right? We've got 41 to 4,200. And if the implied open is around 1%, we're going to be opening in closer to 41, 42. And what happens inside this red rectangle is going to be way more important if there's any sellers that step in or not. Because we've been pushing higher in some of the more lower volume days. So this is it. The bear is going to come out of its hiding. And we'll see if you actually have what it takes. Haas says, how dare you close TMF? How was CPI? Just joined Sorb. So it was good for the most part. Headline was good. Core was, in line with expectations. So I would say like we were base case / optimistic a little bit. So if you look at our grade, headline was optimistic and core was base case. So I would say it was a pretty neutral print, slightly bullish, leaning a little bit more towards the bullish side. So, which is why the markets are very much higher, green on the day so far. So again, we'll find out once the market opens. And Nasdaq also is approaching its respective bear camp. It's going to open somewhere around 12,150s, and we're going to see whether we break past 12,300, a resistance that's kept us lower for the last 4 times. And then, of course, we're going to be on our way to 13,000 potentially. The bear camp sounds like a fun place to send the kids for the summer. No, that does sound like a good place. Yeah, no, that's so Google. Dan says inverted triple leverage natural gas, pretty easy play. Be careful, man. Just be careful with that. Yeah, so Google here, I've got a resistance for Google at around 108, 109. So this is exactly where we have gone rejected right now. And even more recently, we kind of got up to that level, then pulled right back down. Support level is going to be somewhere around $101, $102. So that is a resistance for Google. All right, so the poll is done. Almost 500 votes. We got 65% of people expecting the markets to be green today, and then 27% expecting the markets to be red, with 8% flat expectation. We're going to end the poll here, and we are ready for some market open action after the inflation numbers. Tomorrow we've got PPI, Producer Price Index, equally important as CPI, and I'll be live for that as well. Before we get started, make sure that you drop a like, everyone. 185 likes with over 500 people watching, so I'm sure we can get this number up to over 250. At least 50% of you can drop a like. I would really appreciate that very much. Helps us grow our community, supports the channel, pushes the stream out to more people so more people can join. I would really appreciate it. Thank you so much. Yeah, the one thing interesting is oil prices, right? They pushed up on that inflation print. Let's see if there's anything else that comes out. So U.S. stock futures pointed to a positive open for Wall Street, with core CPI excluding food and energy rising 5.6% after 5.5% rise in February. Markets were still leaning towards further tightening. So most of the numbers either came in on target or slightly better. So like I said, very neutral or slightly better print. And the markets are looking at the combined reports as a net positive overall. So while markets expect rates moving lower, the cut in oil production announced by OPEC Plus group last week has also fanned fears of inflation flaring up. And we don't think that we're there yet, with oil prices rising again and labor market conditions cooling only gradually, risk remains tilted for core inflation to remain elevated for longer. Yeah, Jerome only cares about PCE. I mean, that's the preferred measure of inflation that they follow. So Veritas, when doing tech analysis, is more beneficial to adjust for dividends than using the raw data you think. I mean, adjust for dividends. I mean, that way you have a much better picture, more clear picture of the price action and how the price has moved over the years. All right, couple more minutes left. Very green so far. But Apple's been giving up on some of the gains, right? Let's see here. Apple's pretty much given up on most of the gains. It actually rallied 1% after the numbers came out, and it has sold off about 80 basis points. So it has really pulled it back. Microsoft only up 60 basis points. Google here still pushing higher, and so is Tesla. Still very much up over 2%. So after the gains, starting to go sideways. Look at ESS. Looks like a REIT. Yep. So 4.3%, low volume. I'd be interested to again see their portfolio, what they actually own. ownership, operation, management, acquisition, development, redevelopment. So again, I mean, REITs, the number one thing you need to focus on is what do they actually own? Who do they rent out to? Is it commercial, or industrial, retail, offices, residential? So that's the most important metric there. And pretty good revenues, pretty good earnings, of course. Return on invested capital is a little low, 4.5%. And we got 8 times sales. Price to earnings doesn't matter because they've got price to funds from operations. So I can take a look at this for you, Nima. But really what's going to be the main analysis is what they actually own, right? Where are they renting these properties out to? Or who are they renting it out to? So Baba's down almost 2% right now, pulling right back down. Got some alerts sitting lower at $97. We'll continue to monitor that. S&P 500 opening in at 4129, the Nasdaq opening in at 12,100, and the Dow up over 33,800. So, yep, so we're right inside the red rectangle here for the S&P, and the Nasdaq also coming in right inside this red rectangle at this bear camp that we have. So among big tech, everything's green, everything's pushing higher except for Amazon, which is slightly lower. Yeah, Mac sales, I'm also a little bit, concerned about Apple's quarter that's coming up. And JVN, yes, absolutely. I mean, Eli Lilly has done really well, so I would most certainly encourage you to take some profits off the table there. It's incredibly overbought right now, so wouldn't be surprised if it starts to come down now. Support is going to be at 353 for this. All right, lots of buyers stepping in. Buyers are present. We're going to give the bears a run for their money, looks like. 12,280 is going to be that level. We got a long ways to go. Yeah, Shopify pushing higher. Absolutely. We got Bitcoin slightly down. It's more or less flat here, but let's just run through our watch list. So ones that are green, Shopify 6%, 7% now. InMode up 4.7. Lemonade. We got Cloudflare. We got Datadog, APPS. How is Zscaler doing? Up 2% right now. So this is part of our trade idea in the more recent video. You can check that out if you haven't already. And let's see. Okta, LABU pushing up. We got TrueLeaf pushing higher. DraftKings. CrowdStrike's also green. Upstart's pushing up 3%. Square's at 1.6. PayPal's at 1.5. The ones that are green, we got Tattooed Chef. Alibaba slightly down 1%. JD.com, Tencent. Marathon slightly lower. Vertex is flat all in the day right now. Yeah, Walt. That's funny. Right, Apple's seeing a lot of recovery here back up. So we got the big earnings coming out. So after PPI numbers, after the Fed's balance sheet, after the FOMC statement, and we got initial jobless claims, I think the focus is going to shift more towards the bank earnings, which are going to be coming out on Friday. So the 3 out of the 4 largest banks in the US, they're the ones reporting. Got a video coming out later today on them. And then, of course, next week we've got the actual earnings season starting. Nick, yes, doing really well, pushing higher quite a bit. Snowflake, I don't have a fair value because, like I said, it's not a profitable business. Trades at a very expensive price to sales multiple. So unfortunately, I don't have a fair value on that company. All right, how many people here in the chat believe that we're gonna give up on the gains today? Type 1 if you believe that we're gonna give up on the gains, we're gonna pretty much come down, break even on the day. Type 2 if you believe we're gonna rally further, we're gonna stay very green on the day. So 1 for a gap fill to the downside, break even, we're gonna give up on the gains. 2 if you believe we're gonna rally even higher, we're gonna accelerate, we're gonna stay higher. 1 or 2. Pretty simple. I wanna see how many 1s, how many 2s. It's gotta be quick. This gotta be quick. We need quick answers. Ooh, a lot of 1s. Didn't expect that many 1s, but okay. So now we got 2s coming up. Oleg's typing in multiple 2s. That's why I'm seeing like 5 2s all from Oleg. Okay, got a few 1s. Yeah, I would say like it's pretty mixed, right? It's kind of more or less flat, 50-50, I would say. So yeah, it's going to be quite interesting. Again, keep a close eye on these levels, 12,280. A breakout above this level is actually going to put us in a very good situation because then that can actually turn into a support and actually turn into a bull camp for the bulls. And the next target is going to be 13,200. And S&P, same thing. If it pushes past 4,200, we can put a target up to 4,330. That's going to be the next level. But getting past this level is a big hurdle for the markets right now. All right, perfect. So I'm going to go over maybe 2 or 3 stocks that I've never heard of. If you give me a ticker, I'm going to go over it. But 2 conditions. Number 1, it has to be profitable. Okay? And we haven't heard about this company. Nobody in the chat should have heard about this company. It's publicly traded, profitable. And number 2, I would put market cap over $1 billion. Okay, if it's got over $1 billion market cap and it's profitable, we're looking at it. If we haven't heard about that company, a new idea, brand new. Okay, brand new. Oleg, GitLab, we've all heard of. John, come on, Tesla, really? All right, let's take a look at ONON. So 9.5 billion market cap. I would say like just recently profitable. Or the last couple of quarters have been negative, 70% up year to date. Seems like we have done some analysis on this. So revenue's been growing and just more recently profitable. 160 times earnings. Yeah, not unfortunately what we're looking for. RGA, I don't know what that is. All right, consistently growing revenues, profitable, 9 billion, 2.36%. Insurance company, multi-line insurance. Interesting. It's got a dividend of 2.3%. Not really a growth company. I would consider to be more value. I think the valuation is going to be low, 14 times earnings and less than 1 time sales. So, one to consider from a more value perspective. Something doesn't have a lot of growth, but resistance at 152 if you are looking into this in more detail. MULN, we've gone over before. CLSK, I think that is CleanSpark, isn't it? Yeah, I've already gone over that one. AutoZone is a good one, but we've already analyzed it a few times. NLCP is the exposure to Happy Green without risk. NCLP. Is that right? NLCP, okay. New Lake Capital Partners. 12.5%. Yeah, really, really low market cap. We've only got $266 million market cap for this. So, Brian, MPW, we have analyzed the health insurance, like the medical REIT, medical property REIT. Pretty good yield, starting to push right back up. I've actually got this on the list of companies that I need to analyze right now. So anyway, well, that's going to be it for today, everyone. Thank you so much for joining in. I really appreciate it. It's been a pretty long live stream. We've been live for like almost over 2 hours, I think. Microsoft is, well, Nvidia is coming down. Microsoft is also, I think, lower slightly. And of course, we got the markets still very green, pushing higher, still gapping up 60 basis points, 50 basis points so far. So thank you so much for joining in. Really appreciate it. Don't forget, all the links are going to be down below if you're interested in joining us. I did share the 4 trade ideas video with all the members. You can watch it, as well as the wheel strategy video that's also up on our Patreon that you can access and watch as well. So thank you so much. Hope you all have a fantastic day. And yeah, links down below. Happy investing. If you have any questions, feel free to message me, email me, and I'm always